Hey guys, we are back with another Daily Thoughts with David, and I think today is episode number 29. I apologize for not having a video up earlier today. It was a busy weekend, and I was doing a whole bunch of stuff at my church and getting stuff done, and I was getting my taxes done and doing some other stuff, so I had a busy weekend. Regardless, before we get started, we're going to be talking about SVB and the basic meltdown of the banking industry in the United States of America today. Before we get started, though, I'd really like for you guys to subscribe and like the video if you guys want to hear more content about this. I talk about a whole bunch of different subjects like financials, crypto, NFTs. I'm a hobbyist chicken farmer, small business, faith, men's life, all different kinds of stuff like that. So if you like who I am, even if you don't like who I am, please go ahead and go down below, subscribe to the channel, and watch some of my other videos if you want to see who I am and what I talk about. So SVB and the basic meltdown of the banking sector today. It is Monday, the 13th of March. And so it is the Ides of March today, and it lived up to its name. There was an absolute meltdown of the banking industry, countrywide, basically, and that doesn't just include banks. That also includes financial institutions and a lot of other brokerages and a whole bunch of other stuff, too. SVB is the Silicon Valley Bank, which is in, I believe, San Francisco, California, or near there. On Thursday was already in trouble. They had a huge stock plunge and liquidity concerns from a lot of people who were worried about getting their deposits out. Friday it got worse, and the FDIC came in, closed down the bank, and put it into receivership. And this Monday, today, the rest of the banking industry felt the fallout from that. There were a couple other banks today. I think Western Alliance, Signature Bank got closed down also. That's in upstate New York. There was a lot of regional banks that really got hit hard today. Charles Schwab, the brokerage, was down, I believe, 10 or 11% today. They were down 13% 2 days in a row last week. So basically every financial institution is falling out of the sky right now when it comes to stock price and liquidity. And to go through why that's happening, essentially why these banks are so over leveraged and not able to, I guess the best word is fulfill customer deposits, is because of the following. A lot of these banks are banking in areas of we won't even get into the class structure of it, but I would say higher affluence, larger accounts, over $250,000, which is above the FDIC insurance claim mark. But these banks had received a lot of deposits, as all banks do, and that's their job, is to take in deposits and then give out cash to those who want their deposits back. The mastering in the banking industry and how that whole industry works is they take your deposits and then they invest it into a higher yield investment that will make the bank money, and then they get to keep the difference between what they pay you on your checking account or savings account and what they're making on their investment. A lot of these banks, including SVB, Silicon Valley Bank, purchased bonds or treasury securities from the government, and they purchased them since interest rates are so high right now, where they purchase these bonds at in order to make money on top of them is a really, really big deal. These bonds, if, for instance, you buy a 2-year treasury or whatever, which is one of the most popular ones out there, in a normal economy, they would not be a whole lot. You might be looking at a total yield of 1.5 to 2%, maybe. Depends on the time of the year, depends on what the economy is looking like. But currently, in the past couple of weeks, past couple of months, those securities from the government are up at 4.5–5%. So the valuation of a security bond, I keep saying security bond, of a bond like that is only looking at a 2% yield or a 1.5% yield, is not as high as what a bond would be now. And so those bonds are not worth what they were at one point. They could be 80 cents on the dollar. Okay. So these banks have purchased these securities, and this could also be transferred over into the mortgage department also. So we're talking about basically the bank takes your money, puts it into an asset that's going to make money over time, and they're trying to get 3, 4, 5, 6% yield, depending. That includes mortgages too. If you're paying 6% on your mortgage now, or whatever, 7% on your mortgage now, the difference between that and the prime rate is what they're going to be making in in return. In their return that pays the bills at the bank and makes the bank money, right? So basically what has happened is that with liquidity concerns with the SVB bank, there was a run on the banks, and the bank did not have enough capital or cash on hand in order to cover all of these deposits. From what some statistics I've seen here recently, the bank had a $42 billion bank run. I don't know if that was in one day or if it was over the past 3 days, but regardless, that is a ton of cash, And Silicon Valley Bank is a big bank too. They're like a $200 billion bank, okay? But most of their cash is tied up in these bonds. They were mostly tied up in 2-year yield bonds. So what has happened is that this bank has had to sell these securities at a loss, 80 cents on the dollar, maybe worse, depending on what's going on. And so they are not able to get all of the money back from their investment. And so they're looking at taking a loss on the deposits that they have for their customers, and or not being able to get their money out at all, depending on what the bond market's looking like. So when all these people are rushing to the bank now, and everyone is very, very eager to get their money out of banks, the bank is not liquid enough in order to pay out their deposits. And that turns into a giant mess where people don't think the bank is liquid enough. The stock prices fall 80%, 85%, 90% in a day. And that obviously reduces investor confidence in the market. And it also makes it much harder for them to sell assets of the bank to other banks or to another corporation or a financial institution in order to recover those losses so they can maintain their business and keep running. So SVB took a massive hit, and by massive hit, I mean they are no longer in business and they're in FDIC receivership. Janet Yellen, the Fed, and the Biden administration, and Jerome Powell, I believe, all met today or over the weekend, and they have put together a deal, which they're saying is not a bailout, which is not true, but it is basically a loan in 1-year securities from the government that will be paid for by fees, increased FDIC fees on other bank accounts across the country. So what's going to end up happening is that other people in the United States of America, everybody else who's banking in a traditional bank now, will be paying higher FDIC fees, which the bank pays, but then passes that on to the customer, of course, those fees. We'll be paying for the bailout of SVB Bank. So basically what happened is the FDIC has now guaranteed all customer deposits regardless of the size of the deposit. Normally FDIC insures up to $250,000 on an account, and so they could be reimbursed for $250,000. They're just making it whatever. And there are multiple $100 million companies that have money in SVB Bank that got totally wiped out. Some of those include Circle, which is a crypto company that has a stable coin called USDC. USDC depegged on Friday and over the weekend, and after the bailout, they were able to get their price of the coin, which should be at $1 at all times, or as close to as possible to $1, back to a peg of $1. So in terms of that, they have tried to reduce the contagion in the industry. But that being said, there were other banks that went out of business today, and will be going into FDIC receivership either tonight or over the coming week. I don't know about brokerages or anything like that, but there's a lot of regional banks that are in serious danger right now, and it's going to continue to get worse, I think. We're going to talk about Bitcoin and cryptocurrency in the next video, because I think it's super important to talk about the flip side of this and how Bitcoin and cryptocurrencies have reacted to this giant mess. But if you guys want to hear more about SVB and the giant bank meltdown of 2023, we'll continue to talk about this on the next video, and I would love to talk to you guys more in the comment section about what you think about the situation, what you think about the bailout, what you think about the FDIC increasing fees, and what else we should have done in the meantime. So follow my Rumble channel if you would. It's David Coleman, or David Coleman 27. My Twitter is Colma63ETH. I'm pretty active on there. Instagram is David Coleman YT. And of course, YouTube is David Coleman. So thanks so much. Make sure you like and subscribe below. Really appreciate you, and I'll see you in the next one.